If you've been following along with our IRS notice series, welcome back. So far, we've discussed the CP14 notice, which is typically the first balance due notice. Then we covered the CP501, which serves as a reminder that the IRS still shows an unpaid balance. Today, we're moving one step further in the IRS collection process, the CP503 notice. One of the questions I hear all the time is, I've already received multiple IRS notices. Why do they keep sending me another one? That's exactly what we're going to answer today. We'll walk you through this notice together, compare it to the previous notices, discuss what changed, and explain what the IRS is trying to communicate before the collection process moves even further. My name is Shane Harris. I am an enrolled agent with Profit First Taxes, and every week I help taxpayers understand IRS notices, resolve tax problems, and make informed decisions before situations become more serious. Let's get started. Today's notice move us into orange section of the Profit First Taxes IRS stress scale. The CP 503 is no longer just a reminder that you just have an unpaid balance. It's the IRS becoming more direct and more urgent in its communication. Now, I don't want that to cause unnecessary panic. Orange doesn't mean immediate enforcement action. It means it's time to take action before the situation becomes much more serious. One thing you'll notice as we move through the series is that the IRS language gradually changes. Each notice becomes a little bit more direct, a little more urgent, and encourages you to resolve the balance before additional collection activity may occur. That's exactly what we're seeing with the CP 503 notice. Let's look at where we are in the collection process. We started with the CP14. The IRS first balance due notice. Then came the CP 501, a reminder that the balance was still outstanding. Now we're reaching CP 503. Notice what's happening. The IRS isn't sending a completely different notice, it's continuing a conversation. Each notice builds on the previous one before it. Each one is another opportunity to resolve the balance before the collection process progresses further. That's why understanding where you are on the collection timeline is just as important as understanding what the notice is saying. This has become one of my favorite parts of this series. As with the previous episodes, I'm using a sample CP 503 notice for educational purposes. Your notice may look a little different depending on the tax year and your individual circumstances, but the purpose of the notice is generally the same. So let's read it together. The very first thing I look for is the notice number. Today's notice is CP 503. Immediately, I notice taxpayer has already received previous balance due notices. That's important because it tells me exactly where we are in the IRS collection process before I read anything else. Now, let's look at the headline. Instead of simply saying you have unpaid taxes, the IRS now says, second reminder, you have unpaid taxes for 2016. I think those first two words tell the entire story of today's notice. Second reminder, the IRS is documenting that this isn't the first attempt to collect the balance. It's saying we've already contacted you before, and according to our records, the balance is still unpaid. That's a noticeable shift from the CP 501. There's another sentence I want you to pay attention to. The notice says, As we notified you before, our records show you have unpaid taxes. Again, the IRS is emphasizing that this isn't a new issue. It's building on a previous notice. That's one reason I always encourage taxpayers to keep every IRS notice they receive. Each notice helps tell the story of where you are in that collection process. There's one more statement on the first page that often provides reassurance. The IRS explains that if you already have an installment agreement or another payment arrangement for this tax year, you should simply continue making those payments. That's an important reminder. Receiving another notice doesn't automatically mean your agreement has failed. Sometimes notices are generated while payments are being processed or while an account is being updated. If you're unsure, verify your account status before assuming the worst. Now, let's continue working our way through the notice. One of the first sections I always pay close attention to is titled, What You Need to Do Immediately. I like this section because the IRS is telling you exactly what is expected to you to do. Whether you agree with the balance, disagree with the balance, or need another payment option, the IRS provides directions here. Let's break it down. If you agree with the amount due and you're not already working with an IRS representative, the notice instructs you to pay the balance by the due date listed on the notice to avoid any additional interest and applicable penalties. That shouldn't come as a surprise. As we discussed in the previous videos, interest and failure to pay penalties generally continue while a balance remains unpaid. That's one reason why delaying action often makes resolving the problem more expensive. There's another part of this section that many people overlook. The IRS explains that if your account has already been placed into currently not collectible status because paying would create a financial hardship and your financial condition hasn't changed, you don't need to do anything at this time. I want to pause there for just a moment. Currently not collectible status isn't something the IRS automatically places every taxpayers into. It generally reserved for taxpayers who have demonstrated that paying the IRS would prevent them from meeting their necessary living expenses. If that's already your situation, this notice is reminding you that your existing hardship determination still applies unless your financial circumstances have changed. We'll cover currently not collectible status in much greater details in another video because it's an important topic all by itself. Now, let's look at what the IRS says if you disagree with the balance. The notice tells you to call the IRS and review your account with a representative. It also states, we'll assume you agree with the information in this notice if we don't hear from you. I think that's an important statement. The IRS isn't saying you lose your rights if you don't immediately call. What it's communicating is that unless you raise a question or dispute the information, the collection process generally continues based on the information currently on your account. That's why I encourage taxpayers to review every IRS notice carefully rather than simply setting it aside. Now, the IRS discusses payment options. Just like the CP 501, the notice reminds taxpayers that they can pay electronically through the IRS website, schedule payments in advance, or use other approved payment methods. One thing I appreciate about these notices is that the IRS consistently points taxpayers towards legitimate payment resources. Unfortunately, many taxpayers search online and end up finding outdated or inaccurate information. Whenever possible, I recommend using official IRS resources or working with a qualified tax professional if you're unsure about your options. The notice also reminds taxpayers that if they don't pay or if they can't pay the full amount today, they should pay as much as they can and explore installment agreement options. Notice something important. The IRS isn't saying your only option is to pay everything immediately. It's acknowledging that some taxpayers need another path to resolve their balance. Exactly what that path looks like depends on your individual circumstances. Finally, the IRS briefly mentions the Offer in Compromise program. If you're watching my other videos, you'll know that Offer in Compromise allows certain taxpayers to settle their tax debt for less than the full amount owed if they qualify. The important word there is qualify. Not everyone is eligible. The IRS evaluates each case based on the taxpayer's financial situation and other factors. Because this is such an important topic, we'll dedicate an entire video to Offer in Compromise rather than trying to cover everything today. For today's lesson, I simply want you to recognize that the IRS is reminding taxpayers that multiple resolution options may exist depending on their circumstances. One thing you've probably noticed by now, the CP 503 isn't introducing a lot of new information. Instead, it's reinforcing the information the IRS has already provided. The difference is the tone. The IRS is becoming more direct, more urgent, and it's encouraging taxpayers to address the balance before the collection process moves to the next stage. That's why on the Profit First Taxes IRS stress scale, what a mouthful, we've now moved from yellow to orange. The situation has become more serious, but there is still time to act. Now, let's answer the question that's probably on your mind. What happens if you receive a CP 503 notice and still don't respond? The answer is fairly simple. The IRS collection process generally continues. Notice what I didn't say. I didn't say the IRS is going to immediately garnish your wages. I didn't say they're going to immediately levy your bank accounts. The CP 503 is still part of the IRS effort to encourage you to resolve the balance before the collection process progresses further. But this notice should also tell you something. The IRS has already contacted you more than once. At this point, ignoring the notice becomes a much riskier decision. Let's go back to our collection timeline for just a moment. The CP 503 represents another step forward in the IRS collection process. Each notice has become progressively more urgent. The IRS is continuing to document its attempts to collect the balance and communicate with the taxpayer. That's one reason I encourage people not to wait until the final notice arrives before taking action. Generally speaking, the earlier you address a tax issue, the more options you may have available. Now, let's look at another important section of the notice. The IRS says, we may file a notice of federal tax lien against you. Notice the word may. The IRS isn't saying a lien has already been filed. It's explaining that filing a notice of federal tax lien is one of the actions it may take if the balance remains unresolved. That's an important distinction. The notice goes on to explain that a federal tax lien generally attaches to property you currently own and property you acquire in the future. It also explains that a notice of federal tax lien becomes a public record. Now, I'm intentionally not going into great details today. Federal tax liens are a major topic that deserve their own dedicated video. In today's episode, I simply want you to understand why the IRS is mentioning tax liens at this stage of the collection process. It's another indication that the notices are becoming more serious. Let's talk about penalties for a moment. One of the biggest questions I receive is, why does my balance keep increasing? The answer is usually found right here. The IRS explains that it's required by law to to assess applicable penalties. It also explains how the failure to pay penalties generally works and that it can continue each month subject to statutory limits. That's one reason why waiting often causes the balance to grow. It's not just the original tax. Penalties and interest can continue adding to the amount owed. There's another statement here that I think many taxpayers have never seen. The notice explains that if the IRS issues a notice of intent to levy and the balance still isn't paid within that required time frame, the failure to pay penalty generally increases. That's a preview of where the collection process may be heading. And it's one reason I encourage taxpayers not to wait until they receive a levy notice before speaking or seeking help. The good news is the notice also reminds taxpayers that penalties may be reduced or removed in certain situations. The IRS explains that circumstances such as serious illness, injury, death of a family member, or loss of records due to a natural disaster may qualify as reasonable causes for penalty relief. If you've already watched my video on IRS penalty abatement, you know we covered that topic in greater details. If you haven't, I encourage you to watch that video after this one because understanding penalty relief can be an important part of resolving tax balance. The notice also explains that if you request penalty relief, you should identify which penalties you want reconsidered and explain why you believe they should be removed. That's another reason I always tell taxpayers to keep good records. Supporting documentation can make a significant difference when requesting penalty relief. One thing I really appreciate about this notice is that it doesn't simply tell taxpayers what they owe. It also points them towards possible solutions. Throughout this notice, the IRS is discussing payment plans, offering compromise, currently not collectible status, and penalty relief. Those aren't guarantees, but they are reminders that taxpayers may have options depending on their circumstances. Understanding those options is far more productive than simply assuming there's nothing you can do. Now that we've reviewed the most important part of the CP 503 notice, let's finish by answering some of the most common questions I hear from taxpayers who receive this notice. Question 1. Can I still set a payment plan after receiving a 503? Question 1. Can I still set up a payment plan after receiving a CP 503? In many cases, yes. Receiving a CP 503 doesn't automatically prevent you from requesting an installment agreement or exploring other payment options. In fact, the notice itself discusses payment plans as one possible way to resolve the balance. The important thing is taking action before the collection process progresses further. Question 2. Does this mean the IRS is about to take my paychecks or my bank accounts? Not based on this notice alone. The CP 503 is more serious than the CP 501. That's why we're moving into the orange category of the Profit First Taxes IRS stress scale. but it's still not the final notice of intent or levy. There are additional steps in the IRS collection process before the levy action generally occurs. We'll discuss those notices later in this series. Question number 3. What if I've already made payments? That's a great question. If you've recently paid your balances in full or entered into a payment arrangement, it's possible this notice crossed in the mail while your account was being updated. The notice itself explains that if you've already paid your balance or made payment arrangements, you may disregard this notice. If you're unsure, verify your account before assuming there's a problem. Question number 4, should I call the IRS myself? That depends on your situation. If you simply need clarification about your account, calling the IRS may be appropriate. If your situation is more complicated, like multiple tax years, large balances, collection issues, or you aren't sure what your best options are, you may benefit from speaking with a qualified tax professional before contacting the IRS. Question number 5. What's the biggest mistake people make after receiving a CP 503? Honestly, waiting. Many taxpayers tell themselves, I'll deal with it next month. Then next month becomes 3 months, then 6 months. Before they know it, another IRS notice arrives. The sooner you understand what's happening, the easier it is generally to evaluate your options and develop a plan. And question number 6, what should I do first after opening this notice? Here's the first process I recommend. First, read the entire notice. Don't stop after the first page. Second, verify that the balance is accurate based on your records. Third, determine whether you already have a payment arrangement or another resolution in place. And finally, if you're unsure what your next step should be, get reliable information before making a decision. Sometimes that means contacting the IRS. Sometimes that means consulting with a qualified tax professional. The important thing is making an informed decision rather than ignoring the notice. Let's wrap everything up. Today, we learned that the CP 503 notice represents another step towards the IRS collection process. We discussed why we received another notice, why the IRS language has become more direct, the options discussed throughout the notice, why the IRS mentions federal tax liens, how penalties continue to affect your balance, and why taking action now is generally better than waiting until notices arrive. Most importantly, I hope today's video helped remove some of the uncertainty that often comes with receiving multiple IRS notices. Understanding the process doesn't make the tax debt disappear, but it does help you make informed decisions about what you need to do next. If you're dealing with IRS notices, unfiled returns, tax debts, payment plans, or any other IRS collection issues, Profit First Taxes is here to help. Visit the link in the description below and schedule a consultation to discuss your situation. And if you found this video helpful, please give it a thumbs up and subscribe to the channel and click the notification bell. Every week, I share educational videos designed to help you better understand the IRS collection process and your available resolution options. Next week, we'll move to what I consider one of the most important notices in the entire IRS collection process, the CP 504 notice. We'll discuss why this notice is significantly different from the previous ones, what the IRS means when it references levy actions, and why understanding the CP 504 is critical before the collection process reaches the final notice of intent or levy. You won't want to miss it. Thank you again, and I'll see you in the next video.